Okay, so let's talk about this. You've got a brand new token, a ton of hype, and then just absolute chaos. The Katana token launch was supposed to be huge, but man, it turned into one of those launches you watch for all the wrong reasons. So what really went down here?
I mean, right out of the gate, this thing just got hammered. The new Katana token, KAT, took a massive hit. We're talking a staggering 48% drop in just its first 48 hours. I mean, wow, that is a brutal welcome to the market.
So let's really trace the timeline of this collapse, because it's pretty wild. It opened around 1.3 cents, right? And you see this tiny, brief, euphoric spike, almost hit 2 cents. But that feeling? Gone. Just vanished. What came next was this relentless 2-day sell-off that just wiped out nearly half its value, cratering at just under a penny.
But here's where the story gets really weird. The price is tanking, right? But look at the volume. It absolutely exploded. At one point, it hit nearly $60 million in a single day. To put that in perspective, that's almost double its entire market cap at the time. Wild.
And that is the central mystery we're going to unpack here. Think about it. Massive volume is supposed to mean high interest, tons of buying pressure. So what on earth could drive the price straight into the ground? Let's dig into the anatomy of this crypto dump.
So what was the culprit? Well, it wasn't just one thing. It was like a perfect storm. The price was just crushed by this insane selling pressure coming from 3 totally different groups, all hitting the sell button at the exact same time.
Yeah, a perfect storm is the right word for it. First up, you've got the airdrop folks. I mean, they got these tokens for free, so of course they're going to sell. Then you've got your pre-sale buyers, the early guys, who are happily locking in their 2x, 3x profits. And to top it all off, you have the arbitrage traders swooping in, playing the price differences and just adding to that launch day selling pressure. Let's just zoom in on that first group for a second, the airdrop recipients. We're talking a full 15% of the entire KAT supply. That's 1.5 billion tokens just given away for free, all to people who were staking another token called Paul.
So really let this sink in. You have nearly $20 million worth of tokens, and every single person holding them has a $0 cost basis. They're all pure profit. And they all flood the market on day one. I mean, when free money worth 75% of the entire market cap hits all at once, what do you think is going to happen? You get a totally predictable, massive waterfall of selling.
And this all goes back to this double-edged sword. See, Katana's whole no VC model. That was sold as a feature, right? We're protecting you, the retail investor, from insiders. But the irony is just painful. This so-called democratized launch left them completely defenseless. There was no big institutional market maker there to step in and absorb this insane selling pressure.
Okay, but let's look beyond the chaotic launch for a minute. What is Katana actually trying to build here? Now that we kind of get what happened with the crash, let's check out the underlying idea. Because, the token price doesn't just exist in a vacuum.
So at its core, Katana is what we call a Layer 2 network. But it's not one of those projects trying to do everything for everyone. No, it's designed with one laser-sharp focus, to be a super efficient hub specifically for decentralized finance, or DeFi.
And the engine that powers this whole thing is something they call a DeFi flywheel. No, I know that sounds like just another buzzword, but it's actually an economic system. It's designed to create this virtuous, self-reinforcing cycle of growth and rewards for everyone who uses it. So how's this flywheel supposed to work? It's a pretty cool 4-step loop. First, the protocol generates real yield, which naturally attracts capital. Step 2, that new capital deepens the liquidity, which means better, more efficient prices. Step 3, those better prices, they attract high trading volume. And finally, step 4, all that volume generates fees, which then get paid back out as yield, which attracts more capital. And the whole cycle just gets stronger and stronger. And what powers this flywheel is a 2-token system. It's pretty clever. You've got KIT, right? That's the liquid token you can buy and sell. But here's the hook. If you stake your KIT, you get something called vKAT. Now, vKAT gives you voting power, so you can help decide where rewards go in the ecosystem. And for doing that, you earn a share of all the protocol's fees. It's designed to reward the long-term believers, not the short-term sellers.
Of course, a launch this volatile, it doesn't just happen in a vacuum. It feeds on and it preys on some very specific, very common psychological traps that, let's be honest, a lot of us can fall into.
And this quote really captures a dangerous mindset. It's that feeling, maybe it's blind optimism, or maybe it's just that desperate hope to at least break even. But it leads people to chase their losses. You tell yourself, okay, yesterday's low has got to be tomorrow's high. But then the price just keeps dropping.
And you have to remember, the big market players, the manipulators, they understand these psychological patterns perfectly. They're playing with data, with massive amounts of capital, and they're controlling the narrative. Meanwhile, a lot of retail folks are left playing the game with just feelings, hope, and chasing whatever's hyped. It's a totally asymmetric battle.
And what does that create? This painful cycle, right? A little glimmer of hope, then despair, back and forth, and all the while it's just slowly draining an account. And that, right there, is exactly why understanding the mechanics behind the chaos, like that massive airdrop selling pressure, is just so critical.
All right, so after all that chaos, where do we go from here? What does the future actually hold for Katana? Well, as the dust starts to settle, the price data actually gives us a pretty clear map of what to watch for next.
So here's the breakdown. Analysts have laid out a pretty straightforward framework. The big, key psychological level is 1 cent. If the price can hold above that line and, more importantly, break through that resistance around 0.0115, that's a good sign. It probably means the worst of the launch day selling is behind us. But if we see a daily close below 1 cent, that could be a signal that there's more pain ahead. And really, that leaves us with the big, crucial question here. When you see a launch this brutal, what matters more? Do you bet on the short-term price chart, which, let's face it, has been absolutely decimated? Or do you bet on the long-term vision, that whole DeFi flywheel concept? That's the decision the market is trying to figure out right now.